If you invest in India and you don't know these 5 dates, you are playing it really blindly. Let's discuss these dates. Number 1, March 2000, dot-com bubble burst. Technology companies with almost no profit and no real business model had skyrocketed in valuation. When reality hit, global tech stocks collapsed and Indian IT stocks also suffered massive losses. What was the lesson? Never invest just because the sector is fashionable. Valuation always matters. Number 2, September 2008, the famous global financial crisis. The world witnessed the devastating global financial crisis after the collapse of Lehman Brothers. Panic spread across the financial markets. The Indian market crashed nearly 60% from its peak during the crisis. Even strong companies saw their prices fall sharply. What we learned from that particular incident: markets may crash due to global events beyond your control, but long-term investors who stay invested often recover. Number 3, remember this date, February 2011, Eurozone crisis. Fears around the European sovereign debt crisis shook global markets. Countries like Greece, Portugal, and Spain were struggling with massive debt. Global investors started pulling money out of emerging markets, including India. Lesson: sometimes market fall not because of local problems, but because of global economic uncertainties. Number 4, the famous China shock. The massive 2015 and 16 Chinese stock market turbulence triggered panic worldwide. The Chinese market had surged rapidly due to the speculation and leverage during that time. When the bubble burst, trillions of dollars were wiped out. Indian market also witnessed heavy volatility during that period. And what we learned from that incident was, when a large global economy sneezes, market everywhere catch cold. Last, March 2020, we all know this particular incident, COVID-19 crash bottom. The world faced an unprecedented shock, the COVID-19 pandemic. Global lockdown froze economies completely. Within weeks, market across the world collapsed. India benchmark index Nifty 50 fell nearly 40% in just 1 month. But something incredible happened next. Market recovered faster than everyone expected. What we learned: crashes are temporary, but long-term investing rewards patience. Well, these 5 events were the most recent major incidents. Before these incidents, there were various other occasions where market nosedived. Example: Harshad Mehta scam burst in 1992, and so on. But these dates remind us one of the powerful truth of the market history. That is, market will crash, fear will rise, but disciplined investor, every crash eventually becomes an opportunity for them. This is the snapshot of market crashes and following recoveries. Time it took to recover till the previous highs. This demonstrates the crashes led to huge recoveries and bull market with humongous return. Well, this year also we saw a more than 10% market correction so far. Question is, when will this fall stop and when we see the recovery? What are your thoughts? Let me know in the comments. Thank you.